Hello, and thank you for joining me here today. Given the current context, I cannot join you in person for the Axway Shareholders meeting on the 3rd of June in Paris at 4 p.m. However, I did want to provide you some updates and information about Axway's performance and our future plans. As usual, any comments said by me during this presentation are subject to the risk and uncertainties shown in the forward-looking statements on the screen. I want to start today by going into the successes of 2019, and then I'll share with you some of the updates in 2020 and also a word or two on the impact of the coronavirus on our current situation. So at the end of 2018, we set some targets for 2019, mostly financial, and I'd like to update you on how we did. So our first target was revenue. We had targeted organic growth. We had said positive organic growth, which would be just above zero, and I'm happy to report that we finished the year at 300 million euros of revenue, but more importantly, 3.3% of organic growth. So we are quite pleased with the organic growth for 2019. Next, we gave a range of our profit on operating activities between 8 and 10%. I'm pleased to share that we finished right in the middle of that range at 8.6% as we continue to invest within our business to make us successful for the long term. Our subscription revenue growth was 42%, almost 60 million euros, quite a strong result for 2019, and we're very pleased with that performance. Additionally, our ACV, our annual contract value, on new subscriptions grew 33% for the year in our new signature. So we were pleased with that result as well. And we had a growth in our signature metric of 8.3% for the year, which was a fantastic result following the good 2018 result as well. Besides that, we were able to advance our Amplify platform offering in the market, and we saw some good indications that we're going in the right direction. So diving a little further into the 2019 income statement, full year revenue finished at 300 million, which was up 5.7% in total, or 3.3% organic compared to the 284 million of the prior year. Our gross profit finished at 70%, comparable with the prior year, and you could see in our operating expenses that we continue to invest in our business, as I told you we would at the beginning of 2019. So our sales and marketing expenses grew 19% year over year. Our R&D grew 6% year over year, but we were able to maintain and control our general and administrative expenses with a decrease of 5% for the year. Our profit and operating activities finished strong at 8.6% for the year, which was down from the 11% from the prior year as expected. And in total, it finished at 26 million euros. Our net profit for the year finished at 5.4 million euros, or about 25 centimes per share. So in total, for 2019, we achieved all the financial targets we set for the year to continue to invest in our business while focusing on getting back to growth. So a few years ago when we started this journey, I created the signature metric so we could track the effectiveness of our sales teams. The signature metric is made up of license revenue plus 3 times the new annual contract value of subscriptions signed. So as I said before, we are very pleased to be able to have this metric grow 8.3% for 2019 over 2018. And this was following a 2018 growth of almost 8% as well. So 2 years of strong growth, which will come back to us in revenue over a future period. So as we dive into our 2019 revenue by activity, I'm pleased to see that we had 69% of our revenue on a recurring basis. This is up from the 64.5% in the prior year. And our goal is to continue to grow the revenue on a recurring basis year over year. So we're happy with this result. As we go through the different activity lines, our license revenue dropped 8% for the year, but this was expected as we moved to a subscription-based revenue model. So our revenue from subscription grew 42%, quite a strong growth, as it continues to march forward in our new business transformation. The maintenance revenue, we were quite pleased with the result. It grew 0.6% year over year. The services revenue was down 9% for the year, But this is as we are selling less licensed projects and some of the service revenues are moving into the subscription model, we will see the pressure on the services continue. So overall, as I said, the revenue finished at 300 million euros, up 3.3% from the 284 million euros of the prior year. So when we look at the 2019 revenue by geography, we track 4 main regions, and I'm very pleased to see that all 4 of the regions, for I believe in the first time of Axway's history, were able to contribute positively to our growth. I want to make a few points on our balance sheet. Our balance sheet remains strong for the period. We finished with 21 million euros of cash at the end of 2019, and our net debt stayed at 22 million euros, with our DSOs finishing at 77 days sales outstanding for a period. So everything is quite strong and healthy coming out of 2019 as we moved into 2020. So some non-financial information. We were very pleased to see that our API management solution was moved back into the leadership quadrant in October of 2019 in the Gartner Magic Quadrant survey. Additionally, we were listed as a strong performer by Forrester in the hybrid integration platform wave that they do annually. So these are 2 good indicators that we're moving in the good direction in our strategy. So 2 years ago, I shared with you some of the transformation activities we're going to take place in the group over the next 3-year period. I shared with you that Axway's DNA has always been to move and integrate data securely for our customers. And we needed to build on that and move towards a hybrid integration platform to continue in this strength. So let me share with you some of the advancements we made in 2019 as you see us marching down this path. First, we pushed on the innovation. We came out with additional assets around the Amplify offering. We made the acquisition in 2019 of Stream Data that gave us some event qualities within our hybrid integration platform. And we've continued to invest in our R&D and our product build. Next, we reinforced the management team. We had to have the right leadership to help us drive forward in our transformation strategy. Then we also have engaged heavily in bringing our employees along this journey with us. So then we needed a critical part was to get all the employees engaged moving forward towards the vision we have in the market. We also have taken every opportunity to modernize our organization, as well as continuing to reboot and grow the go-to-market team, both in sales and marketing. All of this was done in 2019, and we're seeing the results as we come out of 2019. So let's see how this momentum coming out of 2019 carries us forward into 2020. So we have been with our customers for the last 20 years, providing mission-critical systems to help them run their business. The goal of this 3-year journey and all the efforts we're taking is so that we could be with our customers for the next 20 years as well. So you see on the screen many of the activities that we're taking on for 2020, such as our catalyst or inside sales or various engagement methods with the customers. But these are all the steps we need to take in 2020 to be successful for the long term. We have put in place already, as I speak to you now, in 2020 these activities, and we're already seeing some of the initial benefits from this work. Looking a little bit at our API management offering in particular, you will see that on the left-hand side of the screen, the chart of our pipeline. This pipeline is growing over the past year, and as you see, even in this difficult situation, we've been able to grow the pipeline. So we're pleased with the pipeline build and the adoption in the market of what we're trying to do around our offering. This trend is also seen in our global pipeline as well. So both good metrics, even though this is a difficult period to operate within. Let me make a quick point on the first quarter's revenue. The revenue for Q1 finished at 64 million euros, down 5% organically from the first quarter of 2019. We saw a strong decrease in our license revenue, as we expected, because we had a very strong comparable basis with a few exceptional deals in the first quarter of 2019. Our subscription revenue grew strongly again, 44% in total and 41% organically for the first quarter, which we were very pleased to see the robust health and adoption of our subscription offerings. The maintenance dropped 3% period over period, but right in line with our expectations for the first quarter. Our services, they did take the largest hit from the coronavirus activity. We expected a small drop with the decreasing license, but we had an additional drop because many of the service projects were impacted by the unavailability of our customers during the first quarter to work with us in the service engagement. So overall, the first quarter was in line with our expectations and not impacted too severely by the coronavirus activities. But we are tracking the signature metric. This is a key indicator of our sales team and our ability to grow our business. And I was very pleased to see that our signature metric grew 4.5% in the first quarter of 2020 on the back of 2 8% years. So we are in the right direction and trend to come out of the transformation period strong, organically growing period over period. Additionally, you will note our new annual contract value of our subscriptions grew over 140%, which was a very strong growth for the first quarter of 2020. Let me make a few words about the COVID-19 situation and the impact for Axway. Around March of this year, we had to take immediate actions to start putting in place measures to ensure the safety and security of our employees first, and the reliability of our services and our offerings in the market with our customers, and to follow all local regulations and mandates in each of the regions we operate within. We set up immediately an executive team that met regularly to follow the status and collect the information we were getting from our employees, from the field, from the governments, from all sources, and to make sure we communicate and apply the information outward, both to our employees, customers, shareholders, and anybody concerned. We've followed and tracked in this meeting as well all the employee issues that may come up and tried to put in place action plans to help us remain strong, both with our employee set and financially. We've continued to communicate and try to keep up to date you, the shareholders, as well as our customer base through this situation. And we've done a lot of efforts over the period to keep up the morale and engagement of our employees, as this difficult period can be very taxing and wearing on all of us. And finally, we have tried where we can help to engage in public-facing and community activities to be a part of the solution. Thanks to Axway's remote culture and international culture, we've been able to move quickly to working remotely for all our employee base. However, we do notice that our customers are going to be severely impacted, and their ability to engage with us, purchase from us, take services with us, and do projects will be impacted. To what extent, we don't know. The future right now is quite uncertain and foggy. Therefore, because of the uncertain situation and environment, we have decided to suspend our guidance for the year. We do have 70% of our revenue on a recurring basis, and we've not seen a slowdown in our ability to recover the cash on our outstanding invoices. But we're fully not able to read the future in this uncertain environment. And so it was prudent for us not to confirm our targets for the year at this time. However, as we move into 2021, 2022, we are still targeting our midterm ambitions over the next 3 to 5 years. We're going to target aggressively to get to 500 million euros of revenue. We're looking to improve our operating margin to between 15 and 20% as soon as possible. And I'd like to see us returning an earnings per share of over €1 per share. Obviously, this will mean both organic and inorganic ways to achieve these targets, and we're setting ourselves up to be able to achieve these goals. So with that, I want to thank you all for joining me here today and spending a little time with me, and I look forward to the next time we can meet in person. Thank you.